We'll look at the gold market now, and I appreciate all the emails I've gotten from people that have done really well in this gold market. We've probably been better in the gold market than almost any of them over months and months. It has been our best analysis. And we look in here as let's get really close in here because it's a very busy chart. And you can see that what we're looking right in here is some multiple cyclical patterns that we see there. So the one right over here, the silver market right over here, and silver's been really sloppy. You can see that. And a low due in a few days and some attempted rally. The gold market, we had two tracks in here. One that if this one really gave us what would be the normal track, but because we had an intermediate pattern that looked like it was weighing on it, we thought it would follow a lower track. It actually tracked a little higher than what our lower track was, but you could see it's pretty much following it. Now, what is pretty significant, you see that blue arrow right over there? We have lost the upward momentum. Now, what did upward momentum do for us in this chart? Well, right over here is where upward momentum turned positive, right around the right around 1790, and then it moved it up $200 in there, and now we've lost that upward momentum right now, and what we're looking at is the likelihood that we're going to be in this corrective period. So we're going to look at the next 2 weeks or so of a declining, choppy market. Where our targets down here are right around 1875 to around 1830, and that's kind of 1830 feels like a bit of an extreme to us, but that is where these supports line up. And we're going to expect that we're going to have a hard time getting much upside in here. That's pretty much inverse to what we see in the dollar, which we think is going to be holding up for a little while in here. So we see this market right now really looking like it's struggling in this resistance, and we're going to call for this modest downward bias for the next 2 weeks. And then after that, getting into a better period over here when we get into September. So 1875 to 1830 is our target, momentum being lost. That is a weakening going on in there. So some of the evidence is that the top really looks to us in place for the intermediate term. That area up around that 2100 really looks like it's done for now, but we think we got another shot at it coming in September, October, based on what these patterns look like. So top in place, silver has downside risk until mid-September. All of that with the silver market probably weighing on this overall metal sector, not really giving us much, but a lot of choppy trading, which has been valuable when you look at this chart in there. So a sloppy period up ahead and a lot of trading opportunity with some modestly lower prices is what we see.